Welcome back to Confident Real Estate. I'm your host, JC. If you've ever watched this channel before, then at some point you've probably heard me say the words ripple effect real estate investing. It's about how to find that next up and coming market and get in before the rest of the market around you figures out that's where they should be buying too. And you can buy early and ride that equity appreciation wave all the way up and cash it in big time in the bank. Ripple effect real estate investing is what every developer out there does and what every savvy real estate investor does. Well, today in this video, I'm going to actually show you how it works. I'm going to show you certain markets in and around the area that I live and invest in, and I'm going to show you how over the past decade or two, certain areas have really taken off as prime examples of ripple effect real estate investing where certain developers got in at the right time. I'm going to show you an area where I invested early and rode the equity wave all the way up. And I'm going to show you how I identify properties in my area right now that I think are primed to be the next areas that see significant growth. And again, we always look for population growth, job growth, economic growth, as far as the amount of money that people are making going up. You want to look to see that there's good school systems, good transportation systems, depending on whether or not you're around a major city. But I will show you exactly what I look for, and we're going to do it very simply. We're just going to do it online, and you're going to see how you could do this online at home by yourself as well in your markets to identify that next hot area. I think you're really going to love what we review today, which means I know you're going to want to hit that like button right now for me, feed that YouTube algorithm, and of course, if you for some reason have yet to join our Confident Real Estate family, it is completely free and fun to hit that subscribe button. All right, let's get into it. Ripple effect real estate investing, a perfect example is just outside of New York City, where we have Jersey City, New Jersey. This is downtown Manhattan right here. You see it says Lower Manhattan. Just across the river is Jersey City, New Jersey, with great transportation via underground transit called the PATH train. There are ferries that leave the waterside area and go to different parts of Manhattan depending on where you might work. And of course, there's also the Lincoln Tunnel and the Holland Tunnel. The Holland Tunnel is right there in Jersey City. The Lincoln Tunnel is a little bit further north. So, ripple effect real estate investing. About 20 years ago, nobody wanted to live in Jersey City. It just was warehouses and factories and really not a great area. But in the early 2000s, a lot of Wall Street, which is based right here in the financial district of Manhattan, realized that they shouldn't be paying Wall Street rents for a lot of their workers who were not actually trading stocks and didn't need to be located in Wall Street. Advertising for financial firms, fundraising for financial firms, all kinds of ancillary jobs that are related to Wall Street and trading don't actually need to be in expensive office buildings on Wall Street. So they started building out the Paulus Hook and waterfront district of Jersey City to accommodate all those employees because it's one stop on the PATH train from Wall Street to Paulus Hook. It's about a 5-minute train ride. And that brought a boom to Jersey City. And then the recession hit, and everybody who was working in finance was suddenly out of a job. But the buildings were already in process and some of them were already built. So that's around the time that yours truly moved over here and took advantage and found that I fell in love with Jersey City. My family loved it. My girlfriend at the time, now my wife, loved it, and we ended up buying. And if you want to see the ripple effect, this is a perfect example because Manhattan is always going to be Manhattan. But Jersey City is that first ripple outside the center of where the stone plopped into the water. And you can see just how far Jersey City has come if you take a look at some of the prices of homes in the area and what they've gone through over the years.
The further back you go, the cheaper it gets. You're further away from the water. It's a longer commute into Manhattan. However, and that's over here in the west side of Jersey City. However, if you are in this primary waterfront area, you see these prices. Nothing's cheaper than $1 million. Everything's over that. So let's take a look at some of these properties and see what they once went for. Let's look at this property right here, 229 7th Street. It's asking $1.899 million. It's a multifamily. Looks like an older brick building, still has the fire escapes, but clearly has been redone. Looks pretty nice. We can take a look at some of the pictures here. It's got a nice front, beautiful back with a fake grass yard, which is common in the city. Very nice to have a little backyard, even though for many of you, you might be saying there's a lot of windows looking at your yard, not much privacy. That's just the way it is when you live in densely populated urban areas. Decent living room, leads into a kitchen, back area, nice counter space. You get the idea. We don't need to go through all 23 pictures. So let's take a look at, on Zillow, the beauty of the features that they provide. One of the reasons I love Zillow is you can look at price and tax history. And let's take a look. Right now they're asking $1.899 million. You see that right here? It was listed as of a couple of days ago, August 17th, 2021. Well, back in 2010, it was listed for sale at $885, and that was as we were coming out of the recession of 07, 08, and Jersey City was just starting to get a boom. As you see here in 2001, just a couple of months after 9/11, this property sold for $449,000. In 2010, it was listed for $885,000. 9 years later, it was almost double, 97.1% increase, almost double in asking price, but they removed the listing a few months later and didn't list it. Looks like they redid it. It looks like it's got new windows, some nice painting, well kept, well maintained, and now they are asking $1.899 million. 20 years, not even, just shy of 20 years, it has gone up significantly. I mean, from 449,000 to 1.899 million. That's a ridiculous amount of equity accrual. And you see just in the last 11 years, it's a 114.6% increase in value. And if we look at the tax history, of course, taxes go up too. They always do. There was just, I could tell you because I live in Jersey City, there was just a reassessment of a lot of older Jersey City properties that hadn't been assessed in quite a while. And you'll see that this property, for the most part, was getting incremental increases, 11,000, 12,000, 13,000 a year. And then it jumped up at the reassessment to 21,000 and change, and is now asking 22,000 a year in taxes, which is less than $2,000 a month. And a lot of you might be saying, that is insanity. Who would pay that? Well, welcome to living in the New York City tri-state area. That is actually considered reasonable taxes. I could show you properties in another video that have tax bills that will blow your mind. We're talking 100,000 plus a year in taxes alone, not counting insurance, mortgage, or any of the maintenance costs that the property also has. Here it's only a measly $22,216. So that gives you an indication of just how powerful the ripple effect can be. And obviously, the more you move away from the center of the ripple effect being Manhattan, and you move towards sections of Western Jersey City and then beyond into New Jersey, you start to see the prices come down, except where there's transit-oriented development, where people perhaps live right next to direct transportation that leads into the city. It's a little farther away from the city. You might get more bang for your buck in the sense of getting more open space, bigger backyard, bigger interior space, and a little bit of a longer commute. But if you live in a area that's transit-oriented development where you're close to main lines of transportation that can get you into the center of it all in Manhattan, well, that's going to add some value to the property. And I've done videos on that as well. So if you haven't clicked subscribe, guess what? You should be doing that right now. Hope you found this informative because, again, ripple effect real estate investing is critical. It's part of your market analysis. It's part of your market research that will make you a lot of money in your investments. I have some major developers that I represent who have constantly said to me, I go to where the area is booming right now, like downtown Jersey City, and I go 2 train stops over, and that's where I build. Because by the time my new development is built, the ripple effect will have caught up to my new development that's now just about to hit the market as the area starts to heat up. And these are developers who have proven track records that they continue to do this over and over. So things to keep in mind, and Zillow can be a great tool. And just so you know, you can also check properties that have recently sold in the area, and you can even filter that search to things that have sold whether multifamily, single family, and how long ago they sold. Things that have only sold in the last 36 months, things that have sold in the last 14 days. You click that, and we click it there, you see a lot of those properties disappeared, and suddenly you get a smaller segment. Let's look at this property, Jersey City, 4th Street. This one sold August 10th, 2021 for $1.2 million. It's a lot of money. I can promise you, I don't know that this one, now that it's sold, I don't think they still show what it once was listed for. Let's take a quick look. But I can promise you it wasn't 1.2 million the last time this sold. Oh, here it is. Yeah, I mean, 1997, this property was purchased for $144,000 in 1997 when Jersey City was still really not a great area. And here you have it. They went a little bit crazy with their asking price in April of $1.62 million. They had to come down a little bit, but they still sold for $1.2 million, which is incredibly successful real estate investing when you look at it from a capital appreciation perspective compared to the $144,000 they paid for it back in 1997 and the $1.2 million they just got for it in 2021. Not bad.
As always, I appreciate you watching all the way to the end. Obviously, it's common sense that it always is best for you to get into an investment before everybody else does, to get invested in something and ride the momentum of everybody else getting behind that investment until you can cash out because you bought lower than everyone else, and cashed out at the top of the market. That's what every investment should be about, but real estate investing, you really have the power to do it. And it's not like stock market where a meme stock could take off for a reason that's completely unrelated to the company's performance. Real estate is a tangible asset, and it is not going to be subjected to meme stock irrationality that may make you a lot of money or lose you a lot of money. You can actually control where you invest in real estate and how the market's going to appreciate and grow around the investments you've made in that market. Because if you know what you're looking for and you know how to read that ripple effect, you will be okay. Always. You will never lose money. Like Warren Buffett says, just don't lose money. If you haven't hit that like button yet, please do so now. Hit subscribe if for some reason you still haven't joined us. We try to give you some great information every week. If you want to see a specific topic related to real estate investing, leave a comment in the section down below and let me know what that is, and we will try to accommodate that for you. Otherwise, until next time.